perspectives there on raising money in this new environment. As we see the sort of global pullback, but ultimately still the opportunities for fintech in this region. I think a couple of the comments that were made focused on the challenges of operating multi-market in this region. Every market has its own regulations. Particularly that's a challenge for companies that want to scale across the Gulf. Of course, that can also be looked at from a different direction. Those differences can also be a great opportunity. They can be a massive competitive barrier for larger companies that are looking at this region. So it's a great opportunity for smaller, nimble companies that know how to navigate local rules to then later on scale. On that harmonization approach then, we're going to now listen to a session about regulation of CBDCs and digital money. And for that, I'd like to welcome Grant Niven, founder and partner at Mingzulu, who's going to chair the next session. Grant, welcome.
Okay, so good afternoon, everyone. We have one of our panelists who's running a bit over with traffic. So you've got myself, Grant, and you've got Sunil and Cizar who will be joining us. So I'd like to welcome the guys to the stage. We're going to make this as informal and relaxed and engaging as possible. And I would really like it if you guys do have questions. If I see a hand go up at various different points, I'll try and focus in on you just to let you engage in the discussion. So first of all, so look, I'm sitting here as a founder of my own business, but prior to that, I was a banker. I was a former EY partner. I've worked in regulated industry for the last 24 years. It's by nature of financial services. It's the thing that we all love and hate in terms of regulation. But I think ultimately, digital assets is an area that is ripe for change. It can disrupt the traditional banking industry for sure, but many, many other kind of parts of the financial service ecosystem. And I think this discussion, I want it to be an opportunity to kind of see where we are and how can regulators work together effectively, right, to bring harmonization. So I'm going to be the challenger. I know you guys have got lots of different experiences. Mohammad, when he does arrive, has been working quite closely in the region with a number of banks, so we'd look to bring him into the discussion as well. So Cizar, I'll just hand over to you just to say hello.
Thank you so much, Grant. So my name is Cizar. I'm the CEO of Antmann Innovation, based in Stockholm, Sweden. I'm a member of the working group on the Digital Euro project and also an expert CBDC at the Digital Euro Association. Have been working for the past 3 years on different CBDC projects and involved in a discussion with several central banks in Europe, in the Nordics, and also globally. Thank you.
So you're going to be bringing in a bit of the broader perspective, which I'm delighted with, in terms of we're not just talking about in region, but some great experiences over in Europe, which we can learn from.
I hope so. Thank you.
Great. Sunil, welcome.
Yeah, thank you very much. So thanks, Grant and Fintech Search for having me here. My name is Sunil, and I represent IDS. We are Information Data Systems, an enterprise blockchain-based products and services company incorporated in Michigan, having our office in India. So today, the CBDC, the word is being heard across the globe. And especially this central bank digital currency is where we, Information Data Systems, have been working closely with 3 central banks, majorly Central Bank of Nigeria and Monetary Authority of Singapore, MAS. So that is about me and my company. Yeah.
Thank you, Sunil. And just to frame this discussion, so we've seen massive disruption around the digital asset space beyond crypto globally over 2022 into 2023. I think a lot of discussions that have been happening at this event have been focused in on that. I think with that, we're seeing banks, traditional financial services institutions considering their role within what was traditionally not touching the likes of digital assets, but now realizing that it is the future and we need to embrace, but some be more cautious, others be more embracing and looking to really take a lead and disrupt. We're seeing regulators increasingly challenge themselves around how they can support innovation, but also protect the consumer, and the consumer beyond retail, but moving into wholesale and financial markets. So we've got these three areas all kind of intertwined now, which is creating a very kind of topical debate across various different geographies. So I think the first thing, I know Cizar, with the work you've been doing in Europe and Sweden in particular, how are you finding the role of regulators in terms of how they're embracing digital assets, the likes of central bank digital currencies? And I'm assuming a lot of people in this room know what a central bank digital currency is, but if they don't, maybe you want to just frame it a little bit for them in terms of your definition of some of the work you've been doing, but how the regulators are playing into that environment.
Yes, thank you, Grant. So before starting talking about the regulation, I would like to start that to say, as we used to say, it's better late than never. So it took almost 10 years for the regulator to start responding to what the industry is asking for the past 10 years. Technology like blockchain, the cryptocurrency world have been there since 2011 or 2012. And there is plenty of actors in the industry that were pushing for almost 10 years for the regulator to start acting. One of the fruits that we can see on a regional level is the EU new regulation of MiCA that's entered in fact on August 2023. And this is the fruit of a deeper collaboration between the regulator and the industry to start building such a clear regulation that sets the foundation for the industry to move forward in the future. It was hard for many of the industry players for the past 10 or 12 years to do business without a clear, regular framework. And now we almost have a hard, breathtaking moment when we saw the regulation and start doing so. So almost Europe now is binded by the MiCA. The case of Sweden. Sweden is also following the EU regulation when it comes to digital assets. And financial institution on top of that is the central banks, is the national financial institution that oversees those kind of regulation. In Sweden, we are having the financial inspection and we are having the Riksbank. Those are two institutions that mainly supervise everything related to the finance in Sweden. It's still, they are taking time to interpret what the MiCA is saying to start implementing them in Sweden. But we have seen since 2017, the Riksbank started doing something on the digital assets, and this is the project called e-Krona project. So for those who are not aware about the CBDC is a central bank digital currency. It is where the central bank of a country initiates projects to start printing money and have a digital version of the currency. Sweden was one of the very few countries that started the CBDC back in 2016. And this year, 2023, they have almost 3 pilots on the CBDC. So I can elaborate more later, but I will let Sunil to move forward on this question.
And I think, so obviously we've got some great work going on in India and Africa in this space. But I think just to add to this, there's obviously, I think one driving force that's been pushing central bank digital currencies is the Bank of International Settlements. Bank of International Settlements, obviously coming with experiences from Europe, but now acting as an innovation hub around the world, bringing central banks together to collaborate has been a big catalyst to central bank digital currencies. Is now being seen in Saudi Arabia, projects running, UAE, there's active projects running. So across the whole GCC region now, this is a mandate that's coming top down. So there's a lot of momentum, and there's some of the learnings that have come from e-Krona, for example. Back in 2017, that was originally kicked off, and still not in mass adoption yet. So there's a long cycle here to get these projects up and running.
So it's been a way, I mean, we have been hearing about CBDC, especially BIS, Bank of International Settlements. But majorly, if you see, having worked with the central banks, which are already into retail CBDC, we at IDS have seen that, what's our observation is that each and every country, when it comes to the regulatory perspective, their design choices are different. Because everyone has their own design choices when it comes to CBDC. It need not necessarily the same kind of the layer that they need to have in place for that retail or wholesale CBDC to come into action. For example, we have made an internal capacity building of close to 400 plus team of Central Bank of Nigeria. And what we have observed is, now we are also going ahead with an implementation of multi-chain based CBDC approach where particularly consensus mechanism will come on one protocol while the data is being there on another protocol. For that aspect, the regulation is completely different when it comes to other countries. So the design choice, when we speak from the regulator angle, it is not a kind of a force, or we are not enforcing that to happen at that level, but it is up to the regulator to see where they come into picture to effectively regulate the digital currencies. Because the programmable money, which is actually the CBDC, right? The programmable money. People talk about anti-money laundering, AML. Now, if I have to say, I'll say that even it is there in the physical cash. We are able to see the fake notes. We are able to see the currency being imprinted in an illegal way. So it is there even in the physical form. Now, the aspect of this programmable governance is what the CBDC from the regulator picture is trying to bring in. And we are closely monitoring this situation across the globe. And this particular regulatory challenges will come, but eventually a day will come, is what we foresee, that there is no other way, rather the central bank should adopt this particular CBDCs.
So moving down the road of ultimately becoming physically cashless is the path, as I'd put it, for central bank digital currencies. Putting more efficiency into the system, trying to put more trust into the system, trying to reduce threats in terms of anti-money laundering, etc. So these are some of the state-level mandates that are coming in. So I think, Cizar, you had another point you wanted to jump in with. So.
I want to add on Sunil, the reasons where countries are adopting CBDCs, we are seeing two approaches. One is the central bank that's asking the question how to implement CBDC. And those countries are seeing the CBDC as a kind of a leapfrogging solution to improve their payment system and get into the digitalization world. The second approach is the countries that's asking the question why we are rolling CBDC. And we have seen this particularly in the Nordic countries, where the payment system and the use of cashless is almost 85%. So the central banks in the Nordics are asking the question, why should we have a CBDC since we have a working banking system and no one is using cash? So this is adding a layer on the regulators. Do we need really a CBDC regulation or not?
Yeah, and this is very timely, because the other question I had is the views of the banks in particular. So having sat in a large institutional bank in Saudi Arabia for several years, running all their digital projects and strategy and ventures, there's a real mixture of appetite for these types of projects. So we've got a working system, why do we need to change it? Yes. So the views of the bankers, and we don't have a banker sitting here just now, but I know you guys are working closely with them. Well, how are you finding in both the markets, Africa, Europe, India, how are the banks responding to the likes of these sorts of state-level mandated central bank projects that are being pushed down?
When it comes to India, yes, recently our Reserve Bank of India, RBI, has started the pilot of e-rupee under the same programmable money, that is the central bank digital currency. It's currently in pilot, so we are yet to see the production level, but we have seen good traction, especially in the African market and as well as the Asia-Pacific region of Southeast Asia. Singapore, Malaysia, Philippines, that area, they are very well realizing the benefit and actual utility of these programmable money concepts. So going forward, yes, we do believe that across the globe already certain protocols are driving this CBDC on a major level. Even in the Europe and Americas is what we are looking forward.
So are the banks responding well to that in those markets?
It depends on the bank to bank. We cannot ask a certain bank to come and join the consortium. If they join, eventually they are the one who will get benefited. For example, Central Bank of Nigeria, who is our very good customer. Now, all the banks of Africa, if they want to come and participate in that consortium, eventually they will have the real-time transparency of what is happening when it comes to the cross-border payments. Now today, it is between the parties who are actually exchanging, and there is a lot of trust gap that it comes. That is where CBDC is solving that problem of trust gap. And yes, as the more and more banks come together, the more robust that CBDC would eventually become.
Okay, thank you, Sunil.
Yeah.
Okay.
Cizar,
So
what's your views? What are you seeing?
Yes, I want to add my personal conclusions on the relation with the bankers. And I can have it in two ways. Back in 2020, they were in a position, what we call a relaxing learning process. They don't make a difference between blockchain as a technology back then and the cryptocurrency as a use case. Many of them struggle to seek information from the technology providers. And then late 2022, so they moved to a phase, what we call a pushed learning process. So they need to catch up and they need to invest themselves to learn more on the technologies and on the other use cases. One of the major works done by the BIS, you mentioned the innovation hubs. So we have 6 innovation hubs around the world. In the Nordics, they created in 2021 the Nordic Innovation Hub. It's based in Stockholm, which gather the 5 Nordic central banks. And they focus mainly on some problems to solve the issues of the banking in the region. One of the issues is the offline payments for CBDC, and the second one is the data and data sharing and the financial data between the Nordics. And here you see that the vision back then is not CBDC. It is something else that's cross-border collaboration between the countries.
So I think that, what are the value drivers then for digital assets? Is a good point you're making. They vary, right? So financial stability, monetary sovereignty, protecting investors and consumers, the driving innovation and competitiveness agenda. I think another big one that's coming out is interoperability. So moving between I as a business or as a consumer, I want to make a payment in any form that I choose. And I think that's a big push that's starting to come from end consumers now. So maybe they want to make a transaction in digital assets and then another party receives in fiat, and having this interoperability between all the different proponents. So out of those sorts of areas, what do you see as being the big drivers to push this to the point where it's becoming adopted? It becomes a given daily practice and infrastructure is up and running. So do you see, and that drives regulation in a certain path as well?
Okay. I would like to add one point on the top of the points you mentioned, and this is the privacy and the ownership. So the main driver for digital assets and the MiCA project was the privacy and data of the users. That was the major force. Who owns the assets and how do we protect those assets owners and regulate the market? So the first point is the data privacy, and then second is the ownership. Then it comes all the aspects of the investors, the interoperability, the security, the stability of the market, the programmability, as Sunil mentioned on the CBDC, and so on. So first of all is the privacy. Once we bind the asset ownership to digital identity, and we know that now the EU is working on a common digital identity project, and this is the main purpose, is to have a digital identity that links all the assets and then set the way for the future transaction for this market.
Yeah, and I think that, that whole kind of combining of value and identity is ultimately the direction this is going. Like, we're all running around making payments, majority of us now with our mobile devices versus even a physical card. So technology is driving us down that path of being cashless through that means. But actually, bringing those two things together is going to probably bring the next kind of wave of kind of disruption in terms of how consumers are engaging. So, and I think, Sunil, from your perspective, out of that long list, and obviously privacy and loyalty has been added into that as well.
See, one thing for sure, it will enable financial inclusion. For example, the central bank can directly put the direct benefit transfer to that. Certain government schemes, government-related incentives, which are directed for particular group. For example, educational loans, which are directed only for the people who are willing to upskill themselves and who are willing to take that loan. Now, many things are taking a different route, okay, and some illegal fields are being taken to access those kind of incentives and benefits from government, right? That can be prevented by having this programmable money, because the actual person who is actually entitled to get the benefit of that particular scheme or the incentive from the government can very well be easily tracked, and this direct benefit transfer is what CBDC enable. And in future, going forward, the entire layer 1 of that particular currency for that country, that CBDC can make it possible, and the central bank will very effectively regulate this going forward by using this particular technology.
And we've obviously got various different types of digital assets. Like we've been talking about central bank digital currencies. We've got stable coins, for example, backed by a fiat currency like USD. Yes. You've got various different other tokenized financial instruments, be it in the bond space, etc. And then we've got the traditional decentralized finance world with crypto. So do you feel that those different sort of types of digital asset classes require different regulations? Can there be an umbrella that sits across the whole that provides that consistency, or do they need to be treated differently?
So if we take the case of MiCA, for instance, there is specific chapters that divides those kind of transactions, if we call them transactions. So the bonds, the digital assets, and the stable coins at some point, and also the other crypto currencies are all together under the umbrella of the MiCA. But they have respective chapters that try to cover all the concerns of the industry players and try to remove the burden of the complicated way that this market is regulated. Another point is that what the ECB, for instance, is doing, they are creating another layer of regulation related to the digital euro, where they are talking clearly about the bonds, clearly about the securities, and the way of the financial markets and exchanges it's linked to the ECB. If we take other European countries, for instance, Switzerland, we have now the digital bonds in Liechtenstein, in Switzerland, since January this year, and they are regulated by the financial regulatory in Switzerland, and the Banque de Suisse has nothing to do with them at some point. So we are seeing that there is two movements, even though inside the same country, where the regulator are struggling to interpret this kind of complicated matter.
And you know, that is a constant across the globe. So even in the UAE, we've got VARA, who are leading the charge in Dubai around virtual assets and regulation, and doing a great job at really pushing the boundaries of sort of supporting innovation, but keeping some guardrails in place. But in addition, we've got the Central Bank of the UAE, who are mandating and pushing down the path of central bank digital currencies. And again, the alignment between, at state level, a central bank, and then a VARA-type organization in this region, again, is something that's kind of playing out. It's maturing. And I think every single geography has similar things happening. So this complexity that's in play is something that doesn't help. It doesn't help. So, and each geography has different implications and different kind of rule books that they're pushing with. So I think this again is something that's it's going to take time to mature. And how do you address it in the first place?
You mentioned earlier a word that it is really matters in this debate is the sovereignty. The central banks, as the sovereign institution of the countries, now they are taking the opportunity to seize their role back again to preserve the sovereignty of the country, including the financial sovereignty of the country. That's why we are seeing this kind of struggle with the newly created authorities dedicated for this kind of activities, and the traditional role of a central bank that oversees everything financial in the country.
Great. Sunil.
So I would like to add one point. So as you mentioned, not just the government bonds, any bonds that are incentivized, that can be tokens, in the form of tokens. When we actually enable them through the bond tokenization, okay, what we are doing here is that we are encoding all of them into a smart contracts. And each and every stakeholder involved in the network is aware of what has to be done for that particular bond, right? What is the value of it and how it is changing. So that current date, we are all following a paper-based transactions, which eventually from the paper-based governance, it will transform to a protocol-based governance. And that is where CBDC is going to be poised. And when it comes to the different kind of design choices and different regulations that across, of course, that is the biggest challenge, as you rightly pointed out. But eventually, like we have one common kind of a passport, that a same kind of a design with the same kind of a book kind of thing. So that kind of regulation aspects would definitely benefit this.
So Sunil, just building on that. So I think one of the things that's drawn me to this whole discussion around digital assets it's the potential disruption it can cause. It can really change things if globally people get it right. And regulation is just one aspect of it. But changing business models, allowing end consumers to receive a much kind of more integrated experience. I personally run my own business, was waiting for a transaction to come through from a client. It disappeared for 12 days in the SWIFT infrastructure. These sorts of things are frustrating to business owners. So seeing efficiency in that would be fantastic, right? And full transparency around where that transaction is at any one point in time. But in terms of sort of broader disruption enabled by blockchain and distributed ledger technology, sort of how do you see that playing out as we evolve? Just kind of any other thoughts, reflections around use cases around this space?
When it comes to digital assets, consider even real estate that can be tokenized. The biggest challenge that we have currently today is, for example, consider this entire area that I'm able to tokenize that on a blockchain, and I'm distributing each of the part as a land parcel to someone else. Now, people who are present here and aware of this area here, the local people, can intend to go forward and acquire a stake in that particular asset. But when it comes to people from other country or any other area who are not aware of it physically, where it is there, what is the asset, which they cannot see with their own eyes, but what is the guarantee that it will improve, okay, if I'm going to invest there, is something that today it's the biggest challenge. Now, people are talking about digital asset tokenization, real estate tokenization, bond tokenization. One particular challenge that exists is this one. While I'm not able to have the physical ability or the visibility to actually monitor the value of that, and how can I trust that particular asset, which is there, of course, on blockchain, but I cannot see that and I don't know actual value of it.
Yeah, I want to add on that the positive thing is that we are seeing the industry is succeeding at some point to change the regulator point of view. Back to 2020, as I mentioned, the central bankers, they don't make the difference between the technology and the use case. And seeing a lot of CBDC digital choices, we start seeing now that they are mentioning the DLT in their requirements. Many of them, they are favoring the blockchain technology as a solution for them. And this is thanks to the efforts of the many stakeholders of trying to build an ecosystem in countries and try to change the way and replacing those old technologies that hindering the transparency and the speed and whatever we are willing to see our transaction made in a fraction of a second. And I think it's still a lot of effort from the industry players and involving more stakeholders to get together to try to change this way and probably set the way for the new financial order of the future, if I may say.
Yeah, I love that, the new financial order. And this is about just changing decades of regulation, technology, it doesn't happen overnight. And I think just around the disruption space, like being able to fractionally own a piece of real estate. When you talked about, Sunil, about financial inclusion, this is where people can actually start engaging in a different way in terms of they can't afford to buy a whole house, but they can take a stake in a proportion of it, or a proportional stake in a Picasso. And all these kind of the technology is allowing that to start happening now. And I think the one thing, and I don't know if you guys, this is about sort of, obviously we're talking about regulation, but in the decentralized world, huge advocates around, and again, some challenges with this, significant challenges around decentralized autonomous organization. So putting governance in place that's governed across many different proponents, and it's the network, it's the ecosystem that provides the validation. Do you feel that's a way forward for regulation in this space?
We are in it. There is countries that started doing the work. Finland, they are having already in place metaverse strategy that drive this kind of industry. Other countries, they are trying to regulate the DAO. In Norway, for instance, there is a huge effort is going on regulating the decentralized autonomous organization involving the industry actors. South Korea now are planning to have the national Web3 strategy that include all disrupting technologies. Sweden is on the way also to build the national Web3 strategies. So we are in it and we are seeing. So soon countries are starting to announce the era of Web4 and then moving forward to that.
Okay. Sunil, your views on this?
So definitely. Every country today is looking forward for this CBDC thing. When it comes to the decentralization, yes, it is the future for sure, because that is enabling the required trust among all the stakeholders involved. When we are going from centralized to decentralized, it is not just the financial inclusion. Of course, it is there, but along with it, operational efficiency is being enabled. The costs are coming down. Operations are increasing efficiently. So that is where we see that decentralization is the future.
So I think I haven't seen any hands raised around questions, and I think we're now getting told the next slot is coming on. But I think I'd just like to thank you guys for your contribution. And before we wrap up, just a bit of soothsaying. So cast your eyes out to 2028, 5 years out. Where do you think we'll be if you could stare into a crystal ball in terms of this whole regulation of digital assets coming together? And you've got less than 60 seconds each.
Okay. For me to be straightforward, I hope to see the developing countries catch up with the CBDCs and give leapfrog to their financial system and then reach what the world advancement in banking is doing. For the developed countries, I don't think so that we are seeing CBDC very soon. And this is from what I got from the central bankers.
Thank you, Cizar. Sunil?
Yeah, so you told 5 years, but I will say not 5 years also, just 2 to 3 years. We are going to see the revolution that CBDC is bringing to the market, and we are actually helping the banks to go to that. And just by 2025 or 26, it is going to disrupt the economy.
Okay, 2 years' time.
Yes,
good.
Now it is the time.
Right. So thank you. And
Thank you
all
so
for
much,
listening to us. Take care.
Thank you.
Thank you, Grant. Let's grab a quick photograph, and thanks for joining us, everybody. So there you go. Crypto CBDCs are happening. It's coming, but there's a long way to go. A lot of moving pieces of the puzzle, not least with regulation, let alone customers and what customers want, whether they're ready or even understand what a CBDC is yet. Innovation, as we know, doesn't occur in a vacuum. It's not really about technology. Innovation and technology are not interchangeable terms. Innovation is actually about people. And on that note, I'd like to welcome Amna Chowdhury who's one of the advisory members at the Harvard Business Review, for a really engaging conversation about how to innovate and how to build and scale up your talent. So please welcome Amna to the stage. Thank you.